world stock markets. He has successfully timed the 2011 $1,900 gold and $49 silver tops, China's April 2015 stock market top, and the U.S. July 20th, 2015 stock market exact top, all to the exact day. He currently forecasts a 2016 gold-silver price explosion and a stock market crash of up to 50%, potentially 70 or 90 by 2020 or 2022. Bo, welcome, good sir. How are you?
I'm good. Thank you very much for the introduction. And yes, thank you very much. I look forward to being here.
Well, I'm really excited to have you on. I met you briefly at an Acapulco where we were. You were a speaker. We exhibited and spoke as well. And your work is phenomenal. It speaks for itself. You put a lot of information out there for free, and then you have, from what I understand, quite the detailed subscriber package as well. I wanted to talk briefly about what you're seeing take place and how you're seeing things unfold specifically in the short term as things are getting very, very interesting on the global stage.
So are you like thinking type of stock market? Is that where we're going with this?
Sure. Yeah, we can go major equities. That's perfect.
Okay. So I sent you a couple of charts. I don't know if you can pull those up. Sure. The first one we label the Dow. Yep. And what we're looking at there is for the world stock markets, and this is the Dow that we're looking at here. But basically, all the world markets are interlaced. So when one comes down, so does the other. All the world markets have been doing that for a long time now. And so what we're looking at is what's called the jaws of death pattern. Or a megaphone, but I prefer using the word jaws of death because basically this is a completionary pattern that happens after hundreds of years. And so what's supposed to happen now is a collapse of the world and the U.S. stock market. We're looking at targets between 6,000 and 5,000 on a low for the initial target for the Dow. So if you look at the chart presently, when we did call the top on July 20th of 2015, that to the day has been holding as the exact day and top. And since then, the markets have dropped in August, they then dropped in January, February, and each time they've come up, they've made what's called a lower high, which is a bear trend. So the bottom line is we have a down cycle for the world stock markets, and this is going to be biblically bad. When it crashes, it will never recover. This is going to be depressionary. This is going to last years. This will be worse. The type of crash that we saw in the 1930s. It's not going to be some recovery. This will not recover for years.
Yeah, it's, and those of us that are, dare I use the word awake, that are looking at what's going on, studying things in the world, looking at just the sheer monetary madness, the amount of monetary creation that has taken place globally, not just in U.S. dollars, but in every currency imaginable. It's like the fire hose filling a Dixie cup kind of thing. How does this obviously impact the metals? I told you earlier, I've been just a buy and hold guy. Whenever I have too much cash, I buy more metal. I'm not a trader, but I think I know the end game here. The monetary system looks like it's going to collapse, and the metals look like really the no-brainer place to be. How does that play into your work and what you see specifically in cycle work?
Well, when you look at the stock market, why does the stock market go up? Why does the dollar go up? Because it's based on one simple premise, and it's called faith and confidence. Simple. That's the only dollar has value. Stock market has value because people believe in it. Okay? The moment you don't believe in it, or you lose faith in it, or the faith wobbles, okay, in the stock market or in the dollar, what happens is people always flee and they run to the one asset class that's been around for 5,000 years. That's gold and silver, period. And so what ends up happening is that when faith and confidence wobbles or crashes, then when people lose the faith, the confidence, they immediately run to gold, run to silver. And so what happens is as the markets start to fall and wobble, Or it could be the gold actually first makes a move, which I think is going to happen here. I believe gold will probably even first make a move and start the whole system to start to wobble. So I think that's maybe even how it's going to play out, because that's what it does indicate from the cycles. But the point is, it's about faith and confidence. Lose faith and confidence, and gold becomes money. Silver becomes money. It's not a barbaric relic. It actually is money. Gold and silver have always been money. We've been taught to believe over the past 200 years that you don't need it because of paper currencies, because of everything else that's available. But ultimately, when everything becomes a problem and fails, everybody runs to the one asset class, and that's gold and that's silver.
Mm-hmm. It's true. And looking at present day relative valuations of gold and silver versus 2,000 years ago versus 5,000 years ago, it's a bit stunning, isn't it? It really supports your suggestion that we're going to see a massive explosion in price.
Oh, absolutely. If you don't mind, I sent you another chart on gold. So let's look at it. Okay. Mm-hmm. So when I was in Vancouver, I spoke at Cambridge House, and I basically said at the very end, I think it was the 28th of January, we are looking for a vertical move to begin on gold. Well, it happened exactly as forecast. And so if you look at the chart I sent you, it's an example, but it's called a flag. Okay, so you look at that low, there's like a light blue shaded area. Well, that low was in January. And what happened? Well, it worked its way all the way up to point number 1, which was in February into March. Okay, so it topped out and it paused. So everybody has been talking about gold going back down. It's going to go back to the new lows again, or it's going to go to 700 or 1,000. It's going to go to 1,100. I've written to all my subscribers that you're never going to see 1,100 again. And the reason is because all that's happening is you've got, if you look at that chart again, it's a flag formation. So what it does, it goes up and down, up and down. It's a spring. Okay? It's a spring consolidating. And all that does is that spring and then explodes. Okay? So there's no such thing as gold's going to go to new lows or going to go down, because when it did go to point number 1, this is key. This is what everybody misses. When it hit point number 1, it took out something that was incredible. It took out the 600-day moving average. So what that means from a technical term is when the market trades above a 600-day moving average, if you look at gold, for example, it hasn't been up there for 5 years. Okay, it took it out and stayed above it. I did an interview at that time with Greg Hunter, and I said it's blue skies for gold. It's never going to go down again. And all that's happened is it actually went higher, and then it traded within a range between 1280 and 1215, I think. And so it was range bound, but that's the flag. And once the flag then moves back up, it's going to go to new, incredibly new highs once point 7 breaks. But the key is, number 1, breaking the 600-day moving average, all it did was, and it dropped. Each one of those drops, all it did is came back and tested the 600-day moving average. So the 600-day moving average became support. And so once you take it out, a line that was resistance becomes support. And that's basically a technical way of understanding, what happened when that occurred. And so gold is in a bull market. And when we did the interview with Future Money Trends on December 3rd, intentionally, because we knew that was a cyclical low date, we were the only ones in the world that called the low on gold to the exact date. And it was at $1,045. No one else did it. And no one believed us. But we were 100% correct. Mm-hmm. When I did that interview intentionally, it's been 100% correct. And all you've seen is a flag. We saw a poll. It's come down from a flag formation. And everyone's like, oh, technical charts don't work. This is a manipulated market. Are you kidding me? People don't understand. Nothing's broken. All the manipulation in the world, all it does is create perfect charts. Mm-hmm. That's all it does. They play into all the manipulations, created this beautiful chart. If you look to the next chart, there's gold. Okay? Well, there is your flag. There is your pennant. There is your bull flag formation. And this is as of the end of March. Once you take out that last green line, it's game over. All the bears are going to get squeezed like they've never been squeezed before, and they're going to experience what happens when you short God's money. Gold is going to go vertical.
Very interesting. Yeah, I mean, this that low of 1045. I mean, looking at this chart, it's incredible. I mean, you planned an interview, you called it for that exact day, and then look at the flag formation that's taken place since then. So the bears that are out there, and some of which might even actually be bulls, they're just short-term bearish. You think they're wrong, that this is the year. I mean, very shortly, and based on this flag formation, how much time could we have left for this thing to complete?
There is no time left.
Right.
Yeah.
We're
my subscribers know exactly where I'm at and the timing on this. So we've got the timing into the top, and it's pretty exciting.
Well, I'm glad you mentioned about manipulation, because that is one of the first objections to chart analysis is, oh, everything's so manipulated, specifically the metals, especially the metals. How can you rely on charts? Well, the manipulation builds the charts, does it not? What specifically in your models makes the coming crash, market crashes, different than those of recent decades? And it seems like the Fed is out of bullets. You know, there's not going to be another TARP bailout per se. It seems like it would coincide with actual geopolitical things taking place.
You know, I've got multiple videos on my website. I've made a few of them, and I basically talk about biblical cycles. But long term, it goes back to what's called the monetary cycle of 1764. And it's like, oh, okay, that was so long ago. Well, yeah, but remember, cycle's been going on for 5,000 years. So what is a cycle? It's a wave. Go watch the ocean, okay? There's like wave after wave. There's little waves, big. They're waves. Waves are everywhere. Light's a wave. Sound's a wave. Everything is a wave. Everything. And so markets are nothing but waves, okay? And so going back to 1764, every 21 years, there has been a cycle low on the stock market, okay, on the world market. There's been a monetary issue. Or you can forget the 21 years. You can do it every 42 years. Every 42 years since 1764, since the Currency Act was enacted, there's been a crash low. Okay, well, the problem is this is the 12th cycle of 42 years. And if you do from 1764, 12 cycles of 42 years, guess where you end up? 2016. I've done all my videos, all my presentations. I've always, since last year, had this year, 2016, as a crash low for the world markets.
Mm-hmm. Very interesting. Can we talk briefly about the COT? There are some folks out there that are, again, maybe short-term bearish, that say the COT, but based on studying the COT numbers, that gold is going to be going down. You say that's nonsense, or it doesn't play in based on what you're saying, what you're seeing. How does the COT? I mean, what are your thoughts there?
Okay, so for a COT, commitment of traders. Okay, so for 4 years, there's people out there that are adamant about, oh, the COT numbers rule everything. They are the geniuses. These people who run the COT numbers, who study them and use them as their key for analysis, and they say, oh, because the COT numbers have hit a certain ratio or a certain point, expect gold to get smashed. Okay, well, guess what? That formula worked since 2011 top. It's been a formula that potentially worked for 4 years, 5 years. Guess what? It's old news, okay? You take that formula, you rip it up, and you throw it in the trash, okay? Because that formula for analyzing COT numbers, anybody who's used that formula since December 3rd of 2015 has been 100% wrong. They keep calling for gold to get smashed, gold to get smashed, gold to get smashed, and they keep being wrong and wrong. So they've been wrong in December, January, February, and March. Constantly. Why? Because the COT numbers are based on a mathematical formula that they're using that doesn't work anymore, because that was for a bear market. Well, guess what? Cycles, when a cycle ends, so when a bear market ended on December 3rd, guess what started? A bull market. So now we're in a bull market in gold. So everything they used for a bear market doesn't work anymore. You throw in the trash, and now we're in a bull market. Okay, and so those people who are adamant about, they're right, the gold is going to go down, and they keep looking at sentiment and the COT numbers, they've been nothing but wrong. And they will continue to be wrong. And now, if people listen to these people, what's about to happen is a vertical move in gold. Well, now they're about to be proven 1,000% wrong, because and what's going to happen? This is the worst part. The people that listen to them missed the greatest opportunity to get in on these prices in gold, because they didn't believe, and they were looking for lower prices, and instead they missed one of the greatest trades in history.
Very interesting. So the commitment of traders, it doesn't correlate anymore, because if you look at the chart right here, we started a new bear market on your call date on December 3rd. So that doesn't correlate anymore. It's out the door. I wanted to ask you that. What do you say to the folks out there that might say, careful with gold only because central banks of the world are hoarding it. They're the very ones that manipulate the markets. So be careful. They may just continue to use their gold hoards to further manipulate the price of gold. I personally want to believe and think that they are potentially just positioning for the end game, like you and I are. What do you believe?
Your choice of words are actually fantastic. They're hoarding gold. If they're hoarding gold, they know something.
Right.
Maybe you should be doing the same thing. Okay. Yes, they know something. But the charts are telling us what's coming. Okay, and so they're hoarding it. The charts are telling us what's coming, and the bottom line is, I'd be hoarding with the banks if I was, if you want to be smart about it.
Yeah, in this regard, it's not so counterintuitive for them to bet against their fiat. I mean, essentially, that's what they're betting against their own shell game. But it's collapsing. I mean, look at it; it's falling apart.
That's correct.
Well, good sir.